Hi, my name is Maura Prendeville. I'm a supervising compliance officer at the OLSC, and today I will be talking you through the Healthcare Security Ordinance, also known as the HCSO. As some brief background, the HCSO has been around for well over a decade, and the easiest way to think about this law is that it is a spending requirement. So it's not an insurance requirement, it's a spending requirement. It mandates that employers have to spend a certain amount of money on some type of healthcare expenditure for their San Francisco employees. There are different ways to do that and different ways to comply with the law that I'll be discussing. But the first step is to figure out whether or not your business is covered by this law. So a covered employer is someone who has 20 or more persons performing work for the company. If it's a nonprofit employer, the threshold is a little higher. So a nonprofit employer would need to have 50 or more people working for it in order to be covered by this law. And we look at the total workforce size, not just the people in San Francisco. So a company that has 4,000 employees in Helsinki and 1 in San Francisco is a covered employer because we're looking at the 4,000, not just the 1 person in San Francisco. So you look worldwide at the size of the employer. Government entities are not covered by this law, so anyone who works for a government agency of any sort is not going to be covered by this. Assuming you are a covered employer, then you need to decide which of your employees is covered by this law. The definition of a covered employee under the HCSO is very, very broad. So you're going to expect that the vast majority of your San Francisco workforce is covered by this law, meaning that they're entitled to healthcare expenditures. The minimum threshold the employee needs to meet is the employee needs to have been employed for at least 90 calendar days for the company. Again, not only in San Francisco, but they just need to have worked for the company for 90 days. If you have someone who has worked for the company for 5 years at the New York office, and then they transfer to the San Francisco office, that person is a covered employee as soon as they get to San Francisco because they have been employed for over 90 days with the company. And then the other requirement is that the employee has to work an average of at least 8 hours per week in San Francisco during any given calendar quarter. So that's pretty broad, and it will mean that the vast majority of your San Francisco workforce is covered by this law. There are a few categories of employees that are exempt, but they're pretty rare. So I will get into those later on. But as a basic rule of thumb, you should assume that your whole San Francisco workforce is entitled to some sort of healthcare spending. I will note, the working 8 hours per week must be in San Francisco. There are some employers like the San Francisco airport that are not within the geographic boundaries of San Francisco, even if it has the name San Francisco in the location. So airport employers are not covered because they are not located within the geographic boundaries of the city. So the employee cannot meet that 8 hours per week in San Francisco threshold. And another thing to note, it does not matter where the employee lives. So this law does not cover San Francisco residents. It covers people who are working in San Francisco. So where the work is performed is what you're going to look at. And that includes people who are telecommuting. If you've got someone who lives in San Francisco and works from home, that's going to be a covered employee. If you have someone who lives in Oakland and works from home, they are not performing work in San Francisco. They will not be covered. But let's move forward with the assumption that all your San Francisco employees are covered by this law. What are the requirements? The number one most important requirement of this law is that the employer needs to satisfy the spending requirement. So each quarter of the calendar, the employer needs to make sure it's satisfied a particular rate of spending. Now, I'm using the 2022 rates. If you're looking at this presentation in a later year, you're going to need to look at our website for the current rates because every January 1st, the rate changes. It always goes up. So the 2022 rates are listed here. Large employers need to spend $3.30 per hour. We'll talk about what that per hour means later on. And medium-sized employers, which have 20 to 99 employees, those employers, those companies or nonprofits need to spend $2.20 per hour on their covered employees. And again, just like I mentioned, when determining employer size to determine whether or not the employer is covered by the law, to determine the rate, you're also looking at the global size. So if the company has 500 employees and only 5 of those work in San Francisco, it's a large employer because it employs 100 or more people. You're not looking only at the San Francisco workforce to determine the employer size and the spending rate. You're looking globally. Regarding the spending requirements. So as I mentioned, you have to spend that hourly rate times the number of payable hours that the employee worked in the quarter. So payable hours includes obviously hours worked in San Francisco or hours for which an employee is entitled to be paid. So if you've got people working overtime, utilizing paid sick leave, utilizing vacation leave, PTO, all of those count as payable hours. There is a maximum though, 172 hours per month. So if you have an employee who worked in San Francisco and because of some big project or there was a lot of overtime in any particular month, maybe they actually worked 220 hours, but your spending will be capped at the 172. You don't need to spend more than that. And what does this look like for a full-time employee? So I have some examples here. If you have, if you're a large employer and you need to spend $3.30 per hour, and the employee works full-time, you're going to use that maximum of 172 hours per month. What that looks like is $1,700 in a quarter. It's right here, 1,700, a little over 1,700 for a quarter. And I broke it down by month here also because so many employers use health insurance as a way to comply with this law, and that's often billed monthly. So if you're a large employer and you have a full-time employee in 2022 and you're spending at least $567 per month on their health insurance premiums, then you'd be compliant because you're spending the minimum that's required here. Same thing with a medium-sized employer. If you need to spend $2.20 per hour, you would multiply it by 172. For the monthly amount, you would need to spend $378 on that person on their insurance or one of the other ways that you're going to be making the expenditures. That would be your required spend. And per quarter, it'd be a little over $1,100. So for a part-time employee, say you have someone who works 20 hours a week, your spending requirement is going to be half that because they don't have as many payable hours. And as an employer, you're only required to spend for the San Francisco hours. So if you have someone who works 20 hours a week at your San Mateo location and 20 hours a week at your San Francisco location, you only need to spend based on the number of hours in San Francisco. So you could have a full-time employee, but they're not spending all of their time in San Francisco. That will reduce your spending requirement. And different ways to satisfy the spending requirement. So medical insurance is the most common, most popular way. A lot of employers are providing insurance anyway because of other legal obligations that they may have or to attract and retain employees. If you're spending money on insurance, you would need to look at how much that costs for the employer and then see if it's compliant. So any payments that the company is making for medical, dental, or vision insurance for covered employees and for the spouses, partners, children, or other dependents of those employees count. And I will note that the insurance does not need to be free to the employee. Many employers will charge, they'll share the cost with the employees. but only the employer's portion of it counts as a healthcare expenditure. So if you have if you're spending $1,000 per month on one of your employees, maybe they're on a employee +2 plan, and you're spending $1,000, it costs $1,000 a month, but the employer's only paying half of that, then the employer spend is 500. It's not 1,000. But it's permissible to have employee contributions. That's fairly common. You just don't count them as the employer spend. Another very popular compliance mechanism is called the SF City option. A lot of people mistakenly call it Healthy San Francisco. That's a misnomer. This is the San Francisco City Option Program that's run by the Department of Public Health. So our office, the Labor Enforcement Office, does not run this program. We enforce the spending requirements, and spending on this program is one way to comply with the law. And I will talk more about that one later. And then any amounts an employer spends on a health savings account, HSA, or medical savings account, or other types of reimbursement accounts that are used for medical purposes only. So you cannot count an FSA, for example. But if you've got other medical reimbursement accounts where the employer can never take back the money, those can be counted as healthcare expenditures. And most common is that an employer will actually utilize a combination of these options to comply. So one scenario we see a lot is the employer has a generous health plan for its full-time employees, and it's made the analysis of the cost and determined that that health plan does satisfy the spending rate. However, it only offers that to its full-time employees. The company also has a bunch of part-time employees that aren't eligible for the health plan, so the employer needs to find a way to spend on those. The employer probably will make city option contributions for that group of people. So that's an example of using a combination of different ways of satisfying the spending requirement. Health insurance for full-timers, city option for part-timers. We also see employers use a combination of them for any one individual employee. So for example, if a large employer is supposed to be spending $560 per month on insurance, but it's only paying half of the cost of the insurance, and maybe the employer's share is $300, they're not spending enough. What they're spending counts towards their requirement, but they need to spend more on that person in order to be compliant. So a lot of employers will, again, use the SF City Option Program as a way to top off their insurance spends. So you may have an employee who's enrolled, who's in the company's insurance plan and is also getting city option because the employer recognizes that the plan is not sufficiently expensive to comply with the law. So that would be one employee getting more than one of these options. And of course, if you have a health plan that's got an HSA attached to it, you want to count any employer contributions towards the HSA. Those also count as expenditures. So many employers will find, especially if they offer different health plans, they'll find that some of their plans are enough on their own, and then other plans that may be cheaper to the employer will have to require some sort of additional expenditure in order to be able to get up to the required spend. So I know that was a lot, but I'm going to be recapping that a couple times. And the other thing to note about the spending requirement is that it is quarterly. So, again, sometimes I'm using reference to monthly spends. That's just because typically that's how insurers will bill the employer. But the law only requires that you make the analysis every quarter. At the end, the employer has 30 days following the end of a calendar quarter to analyze their spending and make any additional spends that they may need to make. So for example, in April, April 1st, the employer can go back and look at how much it spent on its insurance for January, February, and March. And if they discover that they haven't complied in full with the spending requirement for all of their San Francisco covered employees, then they have an additional 30 days to either make a contribution to their HSAs, make a city option payment for those employees, or find some sort of other irrevocable reimbursement account that they can fund in order to comply with the quarterly deadline. So each quarter you got 30 days to figure out how much you spent and make an additional expenditure if needed. Another employer requirement is a mandatory poster. So you'll notice that all of the laws OLSC enforces have some sort of posting requirement so that employees can be aware of their rights. Up here, I have the, excuse me, a draft of the 2022 notice, but it does change every year. So depending on when you're viewing this, you're going to want to go to our website. I'll show you where it is, and you're going to want to make sure you have the most recent version of the form, excuse me, of the poster, because this does get updated every year, so that employees can see the rate that they're supposed to be getting with their healthcare expenditures. And this is typically double-sided. There's English, Spanish, Chinese, and Filipino on this poster. It should be posted at a, in a break room or any other area that employees will see it. You can put it up with your other labor law posters. And if you have people who work from home, you want to email them a copy of it each year. So just to make sure that they see it. So this is a way for you to comply with the requirement to notify employees of their rights under this law. That one's fairly straightforward. The third requirement, maintaining records, is also fairly straightforward. So, our office does audits of employers, and we will go back and ask you for 4 years of compliance records. So you're going to want to show that you have records of the payable hours of the employees, any expenditures that the company has made on their behalf. So if you have insurance invoices that you've paid, you want to keep record of those. You want to include enrollment documents showing which employees enrolled in which plans. If you make city option contributions, you want to keep records of those. Other things that we look at would be, records of employee start and end dates. You'll probably have those in payroll. And you're going to be keeping a lot of these records anyway to comply with other California labor laws, but just make sure that you can easily access any of your HCSO records in the event that you're either audited by our office, or we may call to inquire about your compliance, or you may have an employee that wants to know how you comply and you want to be able to show them your records. If you have HCSO waiver forms, which I'm going to get into later on, you definitely need to keep a copy of those in your compliance records so that you can show them to our office or to an employee if needed. And then the final obligation is there is an annual reporting form that employers have to file with the city each year. And I put this one last because it does sometimes create confusion. Employers sometimes think that the report is the main crux of complying with the law. It's actually the spending requirement that is the most important and the one that's most likely to get employers in trouble if they're not complying with it. The annual report is simply to demonstrate the total healthcare spending for San Francisco employees and to show us the different ways that different mechanisms that you used to comply. This is distributed to employers through OLSC's email list, which I'll show you at the end of this presentation. And then it's also physically mailed to whatever address your business has on record with the because it can cause some confusion. We do every year in April, we do have additional resources on our website. We offer additional webinars and trainings and more information about how to fill out the report. That's going to all be put on the website every April. Okay, now I'm going to talk about exemptions. I'm purposely talking about it later on in the presentation because they are rare. I'm going to continue to say that. There are very few employees that are exempt from the HCSO. the safest approach for an employer is to assume that everyone is covered by the HCSO and entitled to healthcare spending. So the few exemptions are: one, employees who are eligible for Medicare or TRICARE. So if you have employees who are over the age of 65, they're most likely, but not definitely, eligible for Medicare. Those people would be exempt from this law. You do not have to spend money on them. And TRICARE is a specific health program run by the VA. So if you have employees who are on TRICARE, again, you don't need to spend any money on them. That does not mean that if you have employees who are veterans who are getting different forms of healthcare from the VA, those people are not exempt. So it's specifically Medicare and specifically TRICARE. So if you have employees that are on other government-run health plans like Medi-Cal or other types of veteran health programs, they are still covered by the HCSO and they are still entitled to an expenditure. So that's why this exemption is very narrow. TRICARE only, Medicare only. Second one, also quite rare, except for employers that have city contracts or leases with the city of San Francisco. There is a second healthcare law called the HCAO, or the Healthcare Accountability Ordinance, that applies to city contractors or lessees. So if you have, if some of the source of your funding comes from a contract for services with the city of San Francisco, or if you lease property from the city of San Francisco, you are probably supposed to comply with the HCAO and not with the HCSO. And you may have some employees that fall under the HCAO and others that fall under the HCSO, but you won't need to do both for any one employee. If you are not a city contractor, you can just ignore this exemption completely. It will never apply to you. If you are a city contractor, you should know what the HCAO is, and you should know which of your employees are covered by it. If you have any questions about that, please always call our office. But again, that only applies to city contractors. Another exemption that we rarely see are nonprofit employees that are in specific training programs. You would need to call us for more information, because it's not just any type of training program. There's a very specific definition. So if you think you have people that might fit into this category, please call us so that we can advise you as to whether or not that's accurate. We rarely see that one. There are two more exemptions that I'm going to cover, and these ones cause a lot of confusion, so I'm going to repeat myself a few times here. There are certain managerial and supervisory employees who may be exempt from the requirements of the HCSO. However, they have to earn a specific salary amount. It's around $107,000 this year, I believe, but it changes each year. So you'd have to look at our website to see what the salary amount is. And in addition to meeting that salary threshold, they have to satisfy the HCSO's definition of a managerial or supervisory employee. The HCSO's definition is different from a lot of the other laws. It's different from California state law. So simply having the word manager or the word supervisor in somebody's title is not enough to make them exempt under this law. I would say always contact our office if you're in doubt. Do not assume that all highly paid employees are exempt, and do not assume that anybody with a title that sounds high level is going to be exempt. So, the definition of managerial and supervisory under the HCSO is pretty narrow. So this is designed for employees like CEOs, CFOs, pretty high level managers. We sometimes see employers that try to claim, all of their project managers are exempt. Yeah, and salary amounts, depending on the industry, salaries in San Francisco can be quite high. So a lot of times we see employers who have, most of their staff are earning the salary amount that's required by this exemption, but that does not mean that the employees also meet the definition. So the employee has to have a very high degree of discretion and authority within the company or organization and meet that salary amount in order to be exempt. And often, and it's not just the job title, it's the actual job duties. So we've seen cases where an employer slaps the word VP on every single salesperson and then claims that they're exempt, and it turns out they are not exempt because they have no discretion or authority within the company. They just have a fancy title. And we do have to sometimes dig into the weeds with looking at job descriptions and interviewing employees about what their role is within the company. So the safest bet is to just, reserve this for the very, very few highest up in your organization and assume that everybody else is covered by the law. So this managerial and supervisory exemption is supposed to be very narrow. And then the other exemption that can cause some confusion is employees who sign voluntary waiver forms. So I'm going to just back up a little bit here and remind everybody that a covered employee is only someone who works 8 hours a week in San Francisco and has worked for the company for 90 days. It has nothing to do with whether or not they have insurance. You can have employees who already have insurance. They're covered by this law. They're still entitled to a healthcare expenditure. You can have employees who have insurance from their spouse's employer. They're still covered by this law. They're still entitled to a healthcare spend of some sort. You can have employees who pay for their own insurance out of pocket. They're still covered by this law. They're still entitled to a healthcare spend. So that's the rule. The limited exception to that rule is you can have employees voluntarily sign an HCSO waiver form. I'll show you what that form looks like when we get to our website tour. It's not just the form that you turn into your administrator or your insurance provider saying, I don't want the insurance. That's not waiving rights under the HCSO. That is simply opting out of insurance. In order to protect yourself as an employer, if you have someone who is willing to waive their rights under the HCSO, meaning they've read the HCSO waiver form, they understand that they have a right to an alternate expenditure and they're still saying they don't want it, you can ask them to sign a waiver form. However, the other catch here is that the employee has to have healthcare services from another employer in addition to being willing to sign the waiver form. So if you have someone who's on Medi-Cal, they can't sign a waiver. If you have someone who's on who's paying for Covered California on their own, they can't sign a waiver form. You have someone who's paying for their family's Kaiser insurance on their own, they can't sign a waiver form. They're not getting healthcare services from another employer. They're getting it from the government or from by paying for it themselves. So those people are not eligible to sign a waiver. The ones that are typically have insurance from a spouse's job or maybe their other job. And again, they would have to also be willing to sign a waiver form. And one thing I'm going to mention this because it's important. So people say, well, what am I supposed to do if I offered my employee insurance and that's how I was going to comply with the law, and then they don't want it? That's it, right? I've done enough. That is not true. So if you have an employee, if you're offering an insurance plan and somebody doesn't want it and they're still covered by this law, the employer has to find another way to satisfy the spending requirement. So the most common scenario that we see every day is employers utilizing the city option program as a way to make the expenditure for the people who don't want their health plan. And I'm going to reiterate this several times because it's very important. If you have someone who's on Medi-Cal, maybe they don't, maybe you're offering them insurance and they don't want it for whatever reason, or you have someone who has their own health plan and they want to keep it because they have some, some specialist that they need to see, or they have some condition that they need to make sure gets treated. You just find an alternate way to make the spend for them. You don't have to force them into anything. You don't have to force them to sign a waiver. You just say, okay, how else can we spend money on this person? And with the city option program, they can use those funds. I'll talk about that program later on, but they can use those funds to pay for their out-of-pocket expenses or for their premiums if they're paying for their own insurance. So that there's still a useful way that the employer can comply with the law that also benefits the employee. So in the very rare situations where you have someone who's willing to sign a waiver, it's only valid for a year. It cannot be retroactive, so you cannot say, oops, I forgot to get this done last year. Can you please sign this so I don't get in trouble with OLSE? Can't do that. It can only be going forward. They're only good for a year, and employees can revoke them at any time. So for all these reasons, that's why we expect to not see waivers very often. If we audit an employer and they tell us that, oh, we didn't spend any money on healthcare because 80% of our employees signed a waiver, that is a huge red flag for us, because it is so unlikely that that many of their employees actually have insurance from another employer and voluntarily waived their right to have another expenditure. So in any given workforce, we would expect to see a couple of waivers, maybe a handful. They're the exception, they're not the rule. Okay, and other issues, there are employers who have self-funded medical plans, or sometimes dental or vision plans, and those operate differently from the traditional fully funded plans, and the rules and the calculations are slightly different. So the employer still has to meet that hourly rate, but the way they calculate the value of the health plan when it's self-funded is slightly different. I'm not going to get into it on this presentation because it's actually so, it's complex enough that it deserves its own webinar. So we've got some of those on our website as well, and we typically offer one every single year to help employers with self-funded plans figure out how they can comply. And if you have if the employer has some health plans that are self-funded and some that are just the traditional ones, they're still going to have to comply with the quarterly deadline for the traditional ones. However, they can do an annual calculation only for the people that are enrolled in the self-funded plan. Another issue that people ask about is surcharges. So the law does not prohibit, nor does it require that employers pass on the costs of HCSO compliance to its customer. So sometimes there's a misunderstanding out there that somehow the city forces, for example, we require restaurants to charge 5% extra on their bills so that they can pay for this. That is not true. And a business can choose to charge the customer for the cost of complying with this law if it wants to. It is certainly not required by the statute. So businesses may choose to do that, but if they do, they need to make sure that the money is actually spent on the healthcare coverage for their covered employees. So we have seen many cases where the employer's charging its customers 5% on every single bill and spending nothing on its employees' healthcare. That is a big red flag for us. That is going to require enforcement action. So if you're a business and if you're charging extra for this compliance, you need to make sure you're tracking the extra money that comes in and that you're spending it in full on those employees, because that is something we will ask you about in an audit, and we will ask for documentation of where all the money went. So keep records of it, keep records of everything that comes in and everything that goes out so that you can justify your surcharge. Common compliance issues. So these are just the kind of the list of things that we see every day. Failing to make any healthcare expenditures for anyone. So sometimes this happens because an employer is unaware. Sometimes it happens because there's been a transition in the HR or the benefits department, and the person who used to be in charge of compliance is gone and the ball got dropped after that. Spending too little for health insurance. So a lot of employers think, okay, I've spent, I have a health plan, so therefore I'm compliant with the HCSO. That's not necessarily true. How much the health plan costs is what the employer needs to look at. Forgetting part-time employees, that's another big one. A lot of employers nationwide tend to offer health plans to full-time workers and not part-time workers. But if you're in San Francisco, you need to spend money on those part-time workers. So that's a big area where employers slip up. Assuming employees are exempt from the HCSO when they're not. So like I mentioned, misunderstanding or abusing HCSO waivers, that would be a compliance problem. Assuming that everybody with the word manager in their title is exempt from the law, or assuming that high wage earners are exempt from the law, I would say it's always better to call us and ask if someone's exempt from the law before making that assumption, because you don't want to be wrong about that and have an employee file a complaint. Failing to make healthcare expenditures for employees with other healthcare coverage. So, oh, she's got insurance through her husband, so I don't need to do anything. That is not true. Like I said, a covered employee only has to work 8 hours a week in San Francisco and be employed for 90 days. Whether or not she has insurance does not matter. If she's covered by the law, you need to make an expenditure for her. And then surcharges, again, if you're collecting extra money from customers and not spending it on healthcare, that is a big compliance issue. And consequences, just so employers are clear, employers can face enforcement actions. We do audits. We assess restitution, interest, and penalties. There can be administrative hearings. There can be court actions. But one of the reasons we have this online library, one of the reasons we do a lot of outreach to employers, and one of the reasons we have technical assistance hotlines for employers is because we want to help you comply. So we will not punish an employer who calls us and asks for help. If you have realized during this presentation that you are way out of compliance, or this is the first time you've ever heard of this law and you're worried about how to fix it, please call us and we can talk you through it. We can tell you what to do to address the issues. It's always better for you to call our office than for us to call you saying we've received a complaint or we're going to be auditing you. It's better for employers to be proactive and ask for help and fix problems without us having to order you to fix the problem. So I just wanted to put that out there. There can be consequences for breaking the law, but we are also here as a resource for you so that that doesn't happen. And now I'm going to get into some FAQs, and then after that, I'll be giving you a tour of the HCSO webpage. Question 1, I offer insurance, isn't that enough? As I've mentioned before, not necessarily. The employer has to make sure that the insurance is sufficiently expensive to satisfy the spending rate for that year. It also has to make sure that all the employees are actually enrolled. So it has to be expensive enough, and you have to be making sure that all the covered employees are accounted for. So if any of those things are not happening, the employer may need to, for example, if the insurance plan is not expensive enough, the employer may need to add additional expenditures to the insurance. Or if the plan is expensive enough, then the employer may be compliant for the people that are enrolled, but it might have another chunk of employees that are not enrolled in that plan, and it will need to find a way to address those employees. I have a link here that you can click on to see what I'm referring to. Another question, do I need to make expenditures for employees who already have health insurance? Yes, unless there's a waiver, but most of the time, yes. What do I do if I've offered insurance and the employee doesn't want it? You will need to find another way to satisfy the expenditure. That's why there are different options available to employers. So insurance does not have to be the only way that you can comply. This one, what is the difference between the HCSO and the city option? This is a question we get a lot. The HCSO is the law itself that requires spending on employee health care. The city option is a healthcare program, and it is one of the ways that employers can comply by making contributions to that program. If you do contribute to the city option, what do your employees get? There have been various types of misunderstandings over the years, and the program has evolved a bit. But at this point, your contributions to the city option program will get put into a medical reimbursement account for that individual employee. So it's not pooled with other people. It's for that employee. I made a contribution for Jane Smith. Jane Smith has a medical reimbursement account with that amount of money in it that she can use for all of her out-of-pocket medical expenses, whether or not she has health insurance. And I won't get into too much more detail because, you know, that is run by the public health department, not by our office, and you can go read more about it on the city option website. Another question we get, I thought I only had to worry about employees who aren't on my health plan. That's not true. All of your San Francisco workforce is covered by the law. So if your health plan is compliant, meaning it's expensive enough to comply with the HCSO spending rate, then you'd be covered for those people. But you may have employees, or you may have a health plan that's insufficient, and you'll need to find another way to make expenditures on those people that are enrolled in the plan. This one I covered. Doesn't this law apply only to people who live in San Francisco? No, it's where the work that performs, where the work location is what matters. It does not matter where the employee lives. Another question, do I have to do this for my highly paid employees? Yes. Again, a covered employee works 8 hours a week in San Francisco and has been employed for 90 days. It doesn't say that their salary has to be below a certain amount. So you could have someone who's making 300 grand a year and they're covered by this law unless one of those unusual exemptions applies. Okay. Waivers, when are waivers required? They're never required. So again, these would be used in very rare situations where someone has insurance from another employer and is willing to waive their right. So it's the exception, not the rule. Where can I find more information? Well, on these slides here, these have links that you can click on to go to our website, to go to our, to sign up for our email list. We do have webinars about the HCSO and the city option program that we offer every month. And we have a hotline. We are answering the phones 5 days a week. We're answering the email 5 days a week. You are not penalized for calling our office. So if you want to call and you need us to talk you through some issues, or if you're worried that you're not in compliance or that you haven't been in compliance in the past and you want our advice on how to fix that, we can talk you through that. So please do not hesitate to contact us. And now I'm going to give you a webpage tour. So this is our webpage right here, sfgov.org/OLSE. This is the entire Office of Labor Standards Enforcement website. We have it broken into citywide laws and contractor laws, which can be helpful because if you're not a city contractor, you can just ignore this whole list over here and focus on this list. One thing I want to point out on this homepage is that if you want to sign up for our email updates, you do so here. This is very important. This is where we disseminate any updates to the laws for HCSO. Anytime we have information about the updated rates for the coming year, updated salary threshold for exempt employees, that's communicated through the email list. Anytime we have a new poster, all the information about the annual reporting requirement in April, that's all disseminated through this email list. So I encourage you, anyone in your organization that's going to be dealing with HCSO compliance or any labor law compliance in San Francisco should sign up for this. You only need to do this one if you're not a city contractor. So our website is laid out again, citywide laws, contractor laws. Under citywide laws, there are some that all employers have to comply with. You should get yourself familiar with those. And there are some that have a size threshold. So again, 20 or more employees for a for-profit, or 50 or more employees for a nonprofit. That's where HCSO kicks in. So you click on here, and you say, okay, great. This is all the information I need to know about the HCSO. Any sort of updates are going to be here at the top. So anytime, last August, we got our 2022 rates. We put that here as soon as we get it so that employers can plan before they do open enrollment. They can see how much they're supposed to be spending. Any sort of other updates or news will be here. Otherwise, we have forms and documents. This is where we've got our forms. This is where we'd have our poster. We've got the 2020, 2021 listed here. The 2022 one will be up shortly. The waiver forms that I was mentioning, again, rarely used, but if you do have someone who can actually sign one and is willing to, those are listed here. It looks like this. This is the only form that we will accept, and it says Healthcare Security Ordinance Employee Voluntary Waiver Form. Here is where you figure out if the employee is eligible to waive their healthcare services. The employer and the employee need to sign it. They have to list where they get their other insurance and their relationship to the person who's providing the insurance. Then they have to sign it. If they decide that they want to back out, they come back to you and they say, I'd like my waiver form, I'm going to revoke it. They sign it here. But this is what the form looks like, and this is where you get it. We do have it available in multiple languages also. Old trainings are here. We do, like I said, we do special trainings about self-funded plans every year in January. So if you have a self-funded plan, I'd encourage you to be on the lookout for that. We've got a bunch of different instructions and presentations recorded. We do have hearing officer decisions here. Annual reporting information is here along with summaries. There's more information about city option, surcharges. This is general information. The overview section will always show the rate. So reminds you large. What does that mean? What is the rate? What's the rate next year? So this will be updated soon as we head into head further into 2022. Also on the website, in addition to the forms and documents, we've got statutory authority. So this is where you can click on this to read the text of the ordinance itself. The rules are also available here. Those provide a lot more detail, and it shows OLSC's interpretation of a lot of the rules. And then the administrative guidance is here. This is what I think is the most useful section of the website, because here we've got, it's kind of broken up by topic, and it kind of reads like an FAQ. So what I would do here is I'd say, I can't figure out if my business is covered by this law or not. Let me read up on it. And then it's laid out like FAQs in here. So which employers are covered? Who do I count when I'm determining the size? Are owners counted? Does it matter where we're headquartered? Any question you might have about covered employers is going to be answered here. Same thing with covered employees. Hey, how do I figure out if my employee is exempt? Well, okay, look, here's the definition of what they would need to satisfy, and they would need to also earn this much money. So those are kind of organized by topic. I'd encourage you to kind of look through those. We use these regularly when we're talking to employers on the phone. It's kind of designed as like a nice little cheat sheet for compliance questions. And then aside from the administrative guidance, we've got information about annual reporting, filing a complaint. If you've got employees, they're going to go on our website and see our complaint form. Hopefully you won't have anyone complaining if you're compliant. And then if you want more information about the city option program, that would be accessible on a different website, because again, our office doesn't address this. This talks about what the program is, what's the MRA, you know, how do I make payments, and these webinars that they have listed here, the employer webinars, are actually done jointly with our office and the city option program. So we talk about the law, and then they talk about the city option as a compliance option, how it works. So that's available there. And I think that's it for our website. And again, we've got our contact information here, hcso@sfgov.org. You can email us any questions, or you can call us with any questions. And with that, I think I'm finished. Thank you very much. And again, here's our contact information. If you have follow-up questions, do not be afraid to call us. Thank you.